Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we are diving into BlackLine's latest 10K report, their annual checkup with the SEC. Get ready for some number crunching because this report is full of them. Will BlackLine impress or will we find some red flags? Let's find out. This report includes what are called forward-looking statements. Basically, these are the company's guesses about the future. Things like, we expect to grow our customer base, or we plan to launch exciting new products next year. Keep in mind these are just predictions, not promises, and a whole lot of things could happen that cause these predictions to be wrong. The company even warns us that actual results may differ significantly, so it's important to take these statements with a grain of salt. BlackLine sees itself as a key player in helping companies modernize their finance departments. They offer a cloud-based platform designed to automate tasks, improve accuracy, and give finance teams better insights. Think of it as software that helps accountants ditch the spreadsheets and work smarter. BlackLine made a strategic move by acquiring Data Interconnect, or DI, a company specializing in invoice-to-cash automation. In other words, DI's tech helps businesses get paid faster and more efficiently. This acquisition is all about strengthening BlackLine's accounts receivable automation solution, giving them a more complete offering in the invoice-to-cash market. BlackLine is betting big on its Studio 360 platform. This is their latest effort to offer customers a truly unified suite of products. It is designed to connect various systems and data sources, providing features such as data integration, workflow automation, real-time analytics, and industry-specific process templates. So, how does BlackLine plan to keep growing? Their strategy includes several key elements. First is to continue to innovate and expand their solutions, constantly adding new features and functionalities to their platform. They also plan to maintain and enhance their leadership position in the market by expanding their customer base, reach new geographical areas, and addressing specific industry needs. And of course, extend relationships with key partners, which means working more closely with companies like SAP and Microsoft to reach more customers. BlackLine offers a range of solutions, and their bread and butter is the financial close and consolidation process. Think of all the tasks involved in closing the books at the end of each month, quarter, or year. BlackLine software helps automate those tasks, things like account reconciliations, journal entries, and variance analysis, aiming to make the process faster, more accurate, and less of a headache. Another key area for BlackLine is intercompany transactions, which are some of the most complex and frequent sources of uncertainty. These transactions are some of the most complex and frequent sources of uncertainty and process inefficiency for the controller organization, frequently causing imbalances that must be resolved. BlackLine aims to streamline and automate these intercompany processes, making it easier for companies to manage these transactions within their own corporate families. The final piece of the puzzle is the invoice-to-cash process. This area focuses on helping businesses get paid faster and manage their accounts receivable more efficiently. BlackLine's solutions cover everything from cash application to credit and risk management, collections management, and even electronic invoicing and payments. BlackLine boasts a diverse customer base, ranging from multinational corporations to mid-sized companies across various industries. They work with both public and private entities as well as nonprofit organizations. Having a wide range of customers helps to balance the risk and allow growth opportunities. BlackLine relies on a direct sales force, but they also leverage partnerships to reach more customers. Key partners include technology vendors like SAP and Microsoft, as well as professional services firms and business process outsourcers. A significant chunk of BlackLine's revenue comes through its partnership with SAP, where SAP resells BlackLine solutions as solution extensions. The market for accounting and financial software is highly competitive and constantly changing. BlackLine faces competition from vendors of financial operations software and other established software companies, even from some of their own partners. It's a crowded space and requires BlackLine to constantly innovate and adapt to stay ahead. Intellectual property is very important, but BlackLine has only 2 patents. They primarily rely on copyright, trade secret, and trademark laws along with confidentiality agreements to protect their software and brand. Basically, they depend on legal protections and keeping their technology secret to maintain their competitive edge. People are key for BlackLine. They invest in attracting, developing, and retaining talent, focusing on things like inclusion, health and safety, competitive compensation, and employee engagement. They want to create a workplace where employees can thrive, because happy employees usually translate into happy customers. One big risk is the difficulty of attracting new customers, especially those who are used to old, cheap methods like spreadsheets or who have already invested heavily in other systems. BlackLine needs to convince these potential customers that their platform is worth the investment. They also need to sell more solutions to existing customers. If they can't do these things, their growth could slow down. BlackLine relies on customers renewing their subscription agreements. If customers don't renew, choose to downgrade their subscriptions, or switch to competitors, it could significantly impact BlackLine's revenue. Also, changes in the economy, new competing products, or pricing pressure can all affect renewal rates. Economic uncertainty is a major concern. Economic downturns, inflation, fluctuating interest rates, and other global events like the war in Ukraine could hurt BlackLine's business. Customers might cut their budgets for software like BlackLine, which they might view as optional during tough times. Data security is another critical risk. BlackLine's platform stores sensitive financial data for its customers, and a security breach could be devastating. It could damage their reputation, lead to lawsuits and financial losses, and cause customers to lose trust in their platform. BlackLine is diving into the world of AI and machine learning, but warns that their products, offerings, and solutions could be impacted by the EU AI Act if the EU does not approve their AI/ML solutions. Using AI/ML also creates new risks, especially around data security and potential biases in the algorithms, and if not properly used, they could face reputational harm or legal liability. Like any complex software, BlackLine's platform could have errors or defects, especially when new versions or features are released. These errors could damage customers, lead to financial losses, and hurt BlackLine's reputation. They depend on key executives and skilled employees, and losing those people or not being able to find replacements could negatively affect their operations. The market for financial software is very competitive. BlackLine faces competition from many different companies, including large software vendors. Competitors may have greater resources and be able to innovate faster, which could hurt BlackLine's ability to compete. BlackLine's quarterly results can vary a lot due to factors like customer buying patterns, economic conditions, and new product releases. If they don't meet the expectations of analysts or investors, their stock price could drop. Also, they have had losses in the past, and there is no guarantee they will be profitable in the future. The stock price of BlackLine is subject to volatility, with many factors that could cause the price to move up or down, including market sentiment and other economic issues. The company's legal structure is complex. If you as an investor have any issues with them, the state and district courts have a hard-on for the state of Delaware to hear any complaints first. As BlackLine operates internationally, changes in currency exchange rates could affect their revenue and operating results. If the value of foreign currencies changes compared to the US dollar, it could make it harder to predict their financial performance. They might not be able to use all of their past losses to reduce their future taxes. Tax laws can change, and certain events could limit their ability to use these losses, so they might not get the full tax benefit they expect. BlackLine has a significant amount of convertible debt. They might not have enough cash to repay this debt when it's due, and their ability to refinance or repay the debt will depend on market conditions and their future performance. The features of its bond agreements are very complex and depend on the economic conditions. If one or more bondholders decide to enact it all at once, BlackLine's financial flexibility will be affected. Debt can be a good thing to make big moves, but their debt has important consequences to stockholders and significant effects on our business. It could affect their ability to pay dividends, make acquisitions, or react to changing market conditions. They might need to raise more money in the future. If they issue more stock, it could dilute the value of existing shares, and any new debt could come with restrictions on their business. It's a reminder that growth often requires capital, and that capital comes with strings attached. Being a public company has its challenges. They are subject to a lot of regulations and reporting requirements, which can be costly and time-consuming. It can also divert management's attention from running the business. Their business could be affected by natural disasters, climate change, or other events that are beyond their control. Things like earthquakes, floods, or pandemics could disrupt their operations and negatively impact their financial results. Let's look at some key metrics. BlackLine's dollar-based net revenue retention rate, a measure of how well they are retaining and growing revenue from existing customers, decreased from 106% to 102% in the most recent year. This is a key metric because it reflects how well BlackLine is keeping its customers happy and expanding its relationships with them. For the year ended December 31, 2024, BlackLine generated total revenues of $653.3 million and a net income of $161.2 million. Their non-GAAP gross profit, which excludes certain non-cash expenses, was $518.2 million and gave a non-GAAP operating income of $126.8 million. In an effort to address the risk from cybersecurity threats, BlackLine involves management personnel from information security, technology, operations, legal, risk management, internal audit, and other key business functions. They are regularly updated on cybersecurity incidents. Now, what's our take on BlackLine? BlackLine appears to be a strong player in the financial automation space, with innovative solutions and a diverse customer base. Their long-term strategic efforts are all in the right place, but there are some red flags in their execution. A weaker retention rate for this year is slightly concerning since they appear to have lost some steam in that department. BlackLine's reliance on partners and key personnel also presents a risk. A more moderate growth rate, increased labor costs, and an overhanging debt could be a risk in the midterm. Overall, BlackLine has innovative products with great ideas on how to achieve growth, making it a reasonable mid to long-term growth opportunity. Thanks for watching. If you enjoyed, please subscribe, like, and comment.